and then we enter off of that fair value gap. So we are simply just going to play price forward to see what happens. So our market structure shift zone, because we have rated this liquidity pool here, we go up to see what swing high gave us the swing low. And it is this swing high over there. So that would be our market structure shift. And because we have ran through the bottom external liquidity pool, I can mark that out over there, external rate, and I'm going to delete this just to keep the charts clean. So we are waiting for the market to come back up and break above this swing to give us our market structure shift. So we are simply waiting for that to happen. We play price forward, and we can see we continue running down, and nothing yet. Let's play price forward. Did we make a new low? Here we can see we have ran through this low, meaning our market structure shift point moves from that swing to this swing. This swing high gave us this swing low, and then we've made a new low, so we move it down again to this swing. We play price forward, and we are busy running down lower. So we move it down lower, and let's see what happens. Not yet. There we go. Okay. Here, you can see that we did get a market structure shift over there. So we are simply waiting now for a fair value gap to form, and before we can take our entry. Here we can see, here we do have a fair value gap formed. This candle gave us our market structure shift. So we simply wait for a fair value gap to form to take our entry off of. And that formed over there. So we can go, I'm going to let me mark out the fair value gap for you over there. That is our fair value gap. We can go ahead and we can place our buy limit order on the start of the fair value gap. We put our stop below the swing, and we simply target a 2 to 1. And we wait for price to run and see what happens. It takes a while. This is a swing trading strategy. And we are out. And we are out of the trade. With the strategy, you can decide if you want to go break even on a 1-to-1 and take partials, or if you want to leave it and hold until a 2-to-1 is hit. Over here we have our next example. And in this example, I'm going to break down exactly what you need to see and follow the steps that you need in order to turn the strategy into a really, really profitable one. So here we can see that we do have this external range liquidity resting above. So we simply wait for price to run through that liquidity zone, and we see we did get a tap over there. So we can go ahead and we can drop to the 1 hour time frame. But before we do that, we are looking from, remember I said we go from external back to internal. And so we need to spot out our internal range liquidity. And we can see that we do have a small fair value gap resting here that hasn't been filled yet. So we go ahead and we mark out our internal range liquidity, and then we drop to the 1 hour time frame. Now that we're on the 1 hour, I can pull this along. That is our rate of external. Over here we have our internal. And this internal will ultimately be my long-term target. So because we have taken out external, I'm waiting for the market to run and take out internal. Now we simply just wait for a market structure shift before we can get our entry. So at the moment, our market structure shift will be this low over here, because this is a swing low that gave us the swing high. I do not count this as our swing low because it is the same candle. Let's see what happens. Okay, we did get our market structure shift over there. And if we go and we play this forward, we can see that the market is running down. So we go ahead and we take our dealing range tool, put it up. And because we are selling, I said we need to look for PD arrays in the premium because we are selling. If we are buying, we are looking for PD arrays in the discount. So the premium will be the 0.5 to the 1. This will be our premium. And if we go and we look there, we can see there's a fair value gap resting above over there. So I can remove my dealing range. This will be my entry fair value gap. So I can go ahead and I can place my sell limit order at the start of that gap, put my stops above the high, and I can simply target a 2 to 1. But because this internal range liquidity will be my long-term target, I can take partials as soon as we hit 2 to 1 and let the rest run all the way down to my internal range liquidity. So if you play this forward, we simply just wait for price to go ahead and to tap into our order to see how the market behaves. Let's play it forward. Okay, there we get our tap into our fair value gap, and we just wait for price action to do its job. Here we can see the market runs down, hits our 2 to 1 take profit. So now you can take a partial and leave the rest running until this internal range is hit. Over here you can see the market also ran down to this liquidity pool over there that you can also go ahead and take partials, and then you leave whatever is left of your position. You can leave until the internal range is hit. Let's see if it gets hit. There we go. You just look at this reaction. The market hits it and spikes up. So you had a 5 to 1 risk to reward to risk trade on this position. This is an extremely powerful strategy that you can use in order to pass your challenges, get payouts, and become a full-time trader. Here we have our final example, and I want you to pay attention to this example. I always leave the gold nuggets at the end of the video to the true people who really want to succeed in trading. If you can't watch a 20-minute trading video that explains everything for you, trading will be very difficult. So well done for the guys who stuck around to the end. And I hope you take notes of this example. So I said in the beginning of the video, every single swing point is external range liquidity. It doesn't have to be a massive swing point like this. You can see there's nothing above the swing point. It can be a very small swing point as well. Over here, you can see that we have a very tiny external swing point. So we go ahead and we mark that out as our external range liquidity. And if we go in this dealing range, we see that we do have a fair value gap resting over there. That would be our long-term target. So we drop again, we drop to the 1 hour time frame. And let me just tidy this up. Okay. Now, we simply wait for a market structure shift to happen. This swing low gave us this swing high. So this will be my market structure shift level, and we simply wait for price to do its thing. Either we move up or we get our market structure shift. Let's see what happens. Nothing yet. Play it forward. Okay. Here we got our market structure shift. So in this range, where is our internal liquidity that we can take our entry off of? The only fair value gap we have is over there. This is our fair value gap where we take our entry off of, and we simply place our sell limit order there. Stops above the high to be safe. You can put the stop loss above the fair value gap high candle, but in my back testing I found out that this is more reliable. So let's see, we can take a 2 to 1 with partials, and we leave the rest running until our internal range is hit. So let's see what happens. Play price forward. We get an entry there, and let's see what happens. There we go. Market comes up. You can see that if you were to place your stop loss above the fair value gap high candle, you would have gotten stopped out over there. So we put our stop above the high to be safe. Our 2 to 1 is hit, so we take partials, and we can leave the rest running all the way until we hit our internal range liquidity. Let's see what happens. Got very close, but it didn't stop us out. We are still in this trade. Let's see. And we are out. Price eventually hit our internal range liquidity for a 4-to-1 risk to reward. Go back to the daily time frame so that you can see how it looks like. And we can see we had a beautiful trade with the retest filling this daily fair value gap over there, and it ultimately ran down to hit our internal range liquidity. I hope you guys realize how powerful this strategy can be if you apply it properly with the rules I showed you exactly in this video. This is applicable to Forex, crypto, futures, indices, stocks, everything you want to trade. This model is extremely powerful. Guys, I hope you enjoyed today's video. As always, remember about the giveaway. You have to be subscribed, you have to like and comment every video, and you have to be part of the free community to enter the $500 giveaway. Make sure you participate. It is not to be missed. I hope you enjoyed. I see you in the next video.